All right, everyone, welcome back for another episode of Carnivore Trades. Today is Wednesday, January 11th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets today. So, big CPI number tomorrow, and markets are up 1% on the day here on the spiders. Triple Qs up 1.45, just under 1.5%. And the Dow up 0.5%. Russell is up nicely as well. See the IWM in the corner of my screen there, up 1% as well. Right into that 200 moving average there, though. But again, the Russell's still leading, and that is a decent sign here moving forward. You do want to see the Nasdaq and the Russell leading, and that is the case. The problem here is, if you ask me, this is not the type of price action that you wanted as a bull today. So I know the market's up nicely. We're having a really nice day, and the Nasdaq's leading, the Russell is leading. The semiconductors are, I believe, through that 200 moving average there. Yeah, so through that 200 moving average right now. The Dow transports are holding up well. So everything's really, the boxes are checked, except for the fact that, well, there's no volume. So I see a very light volume rally here, a pretty much uncontested rally, right? So we had this little kind of consolidation here in the morning, and then just a kind of a float higher. Apple and Tesla really leading, although Tesla is off the highs here a little bit. But the problem I have is it's very light volume, and essentially this type of price action it's basically saying the market's pricing in a soft CPI. And that's bad for two reasons. One is that if we get a hot CPI, the market's really in serious trouble. Even if we get a cold CPI, a lot of that's going to be priced in, which means it's going to be harder to justify current prices, right? It's going to make it harder for the market to rally. Now, if we get a cold CPI, which I think is probably going to happen, and remember, the bond market told us that last week. We mentioned that here, that big power candle we had on the 2-year, kind of indicated that we're going to get a cold print here, and that was right after the jobs numbers. Remember that? So basically, the bond market was saying the jobs numbers were irrelevant and that the CPI was going to come in cold. I think that's what we're going to get here. Also, the 2-year still has that nice weekly inside bar and that inverse head and shoulders there that still has not played out to target yet. So I think the positives here for the market are, the transports, semis, Russell, Nasdaq, all leading. That looks great. Cloud software even having a nice day here, IGV. So you're seeing tech lead, which is what you want. But you're seeing bonds, the 2-year essentially saying, hey, we're probably going to move up here, right? If we have a cold print, the 2-year is probably going to go up to this level and fill that target. And here's the 30-year ZB holding up well as well, up 83 basis points today, basically reversed all of yesterday's move. So that's the positive. The negative is that it's just, at this point, you're getting up into the upper risk range, right? So we hit the gap window today. We actually hit the high of this candle, or I believe we hit the high of this candle, or we got close. Not quite. So 394.92 was the high of the day. The high of this candle is 395.25. It's close enough. The opening price, though, was 394.30, which we have pierced. So we did hit the gap window. So, we pulled back just a little bit off of that. Again, there's not a lot of volume. We didn't see any real sellers come in. I would say that it's likely we probably want to go up. I mean, the 200 moving average ain't that far away now. I mean, 397.81. What's 3 SPY points these days, especially when you have a catalyst like CPI, right? So I think that, it's likely the market's going to react positively. The big question is, do we hold the gains, right? Because, we had in December, big pop here off of Powell, couldn't hold the gains. We had the big pop off the FOMC, couldn't hold the gains. So that's going to be the real story. I don't have risk priced in, well, I should say risk priced in. I should say I don't have the market turning down until probably next week, at least maybe even after next week. Main reason is it is Options X week, and a lot of the time you don't see really big sell-offs into on Options X. It's very rare. We did have one in December, but I mean there was a lot of bulls in the market here, and it was we had this big consolidation pattern that was playing out, and a lot of people were calling for the Santa rally there. Whereas where we are now, it was only, let's say 4 trading days ago that everybody was positioned bearish, and that's evident as the squeeze that we've just had. So I'd advise caution. We'll say that very, at the very least. I don't necessarily have the market, coming down sharply. Like I said, until at least next week or after next week. But at the same time, this price action does make me very nervous. Okay, so I've been doing this, long enough to know that when you just rally up into a major news announcement, or if you sell off into a major news announcement, it makes it that much harder to continue in that direction. So, things get priced in essentially. Outside of that, all the boxes are checked. I mean, like I said, all the leading indicators that should be leading are leading. And I don't really see any problems other than the volume here. So that's really the only issue. I wish you would. We did. Now, the thing is, we did go up on heavy volume last Friday. So, you do have to take that into consideration here. But at the same time, we are getting into a pretty good risk zone. Again, the gap fill up there, 200 moving average, of course, the all-time high trend line that everybody knows about. And then you have, if we flip over to the Qs, so that's into the 50 moving average right now. I don't think this is as important right now. We got kind of close to it on Monday. We backed off, and now we're back up into it. So it's a little bit more minor to me, at least in the near term. And it looks like we're about to close. Yeah, we're basically right on it right now. Our market's closing in 10 minutes. The bigger level to me here is obviously this green bar low. That was your breakdown level, and then the weekly 200 moving average. So that's going to be at 280.74. Again, I've been telling you guys for probably the last month or so, when the Qs rally up, they're going to want to go to 280. So that's what we're looking for here. Also, the 100-day moving average, 281.63. So there's kind of a convergence here. And you could even say that the 20-week moving average right there, 278.67. So there's kind of a convergence in that 278. We'll call it 282. We'll give it the upside to 282 kind of zone there on the triple Qs. If somehow we were to continue rallying, there's a gap fill right there at 286.51. And then, of course, that previous trend line, which I don't think we get anywhere near there. That would be like the max move for the Qs. But those are the levels you're watching there. And again, like I said, I do favor an up move. It's just I don't know how long it can be sustained for here, given the nature of how we've moved up into it and ahead of it. But another thing to consider too is we're also going into earnings season. So maybe they want to keep this market held up. We have banks reporting Friday, a couple of airlines as well. By the way, take a look at the airlines here. This is the jets. This is a mega short squeeze here ahead of earnings. So we'll see what the jets do here. You can see Delta, very big move here, although that came off the highs. American Airlines having a nice move. Boeing, take a look at Boeing, just continuing to, it has pulled back a little bit here, but what a surge there. I mean, in October was at, $120 equity. It's 208 right now, which for Boeing, that's a really, really big move here. But anyways, so bank earnings, all right, yeah, Russell 2000. So again, let's get over to that. So we are above the 200 moving average. I mean, max move would probably be up into 185, have that red bar high there, and then these sell pivots above that. But the Russell's holding up well, and again, you have a failed bear pattern here, and that's usually why you give it the bias here. So as soon as we had that outside move on Friday, so we're probably going to go a lot higher, just across the board, spiders, Russell, everything else. And you're seeing that hold up well. Again, we'll have to see what it does tomorrow. Dow, same thing, but notably, is barely really, it's not even above 339.41, which was Monday's high. So again, this is really not bearish, though, because the Dow doesn't have to be leading. The Dow can actually be lagging, which it is, and it's not a big deal as long as the Qs are holding up, and the Qs are, and they're above Monday's high pivot. The Russell is well above Monday's high pivot, and the spiders are above Monday's high pivot as well. So again, we're seeing bullish underlying kind of internals. It's just that price action. I would have preferred a sideways day today, honestly, for the bulls. But overall, we'll see what we get tomorrow. It's going to be all about the market's reaction, and do we hold the gains or not. Anyways, let's get over here to the semis. So SMH above the 200 moving average. This is not above Monday's high pivot. It's basically right there, 220.72. Okay, so I'm sorry, it is. So it is just above that pivot by 20 cents. It should close above that unless they, whack it down for some reason here. I mean, it's getting a bid here. We're doing okay. I don't see them pushing it back below there. But in any case, that's kind of explained by the fact that you hit the 200 moving average. You're also into this gap window. There's a gap fill right there. I do expect the semis. I would expect the semis to have to slow down at this area anyway. But, you know, they are above Monday's high pivot. So that is a sign of strength. And again, semis leading. I've been telling you guys that for quite a while here. It's one of the reasons why I called for this rally in general. Again, semiconductors into the 50% fib, whereas the Qs were basically, you know, 3% away from the all-time, or not the all-time low, but the 52-week low. So in any case, semis holding up all right. IGV holding up okay as well. Getting a nice bid here into the final 10 minutes. We're not above Monday's pivot here, but I do like this for a move tomorrow. This should at least fill the gap at around 269.26. So that's an upside move there. And then you have that red bar above that, but cloud in pretty good shape here. Transports as well above Monday's high pivot, well above this red bar. So you're above the breakdown bar now on the Dow transports, and it might actually get up to this trend line after all. So let's draw this in here. Oops. All right, so right about there. So that's that previous flag pattern that failed. Now let's, again, just so in case you haven't been following, this is still a failed pattern. So we have an inside bar here on the weekly. We close below that. That's failed. But in the near term, that doesn't mean we can't push up and possibly make a lower high. So be on guard for that. One thing I will be watching for tomorrow for sure is if we gap up and the transports can't hold the gap up, but the spiders do hold the gap up, that would be a huge negative. So we're going to watch that closely tomorrow. But for right now, transports are signaling there's more upside likely here. All right, over to, we kind of mentioned interest rates already, but we'll look at the 10-year here. Again, it's below that trend line. The TYX as well. It is threatening to move lower here. So I do think bonds get a bid. Nice price action today on ZB, basically erased yesterday's sell-off. And you do have a micro kind of bullish inside bar here. You know, I'd hate to even use these terms, but like it's almost kind of like a cup and handle there. And I just don't like it because it's often, you know, people fall in love with those patterns and they fail a lot, but it, you know, it does have that kind of look here, and I don't really see any issues with ZB at the current time. And I do think ZT gets up to that level there. So I like this, but I actually like this pattern even better. Nice up move, upright consolidation. That looks good for a pop. All right, so let's get over to home builders. Again, these are leading. XHB got above that pivot from the December FOMC. ITB up into resistance now. So this is into that 66 level. You know, could it go up into, you know, maybe this red bar here? It's possible, but this is getting really extended to the upside here. Very long in the tooth. I do not have this going much higher here. So XHB, ITB home builders, if you ask me, are getting up to a very, very, you know, they're a lot closer to resistance than they are to support. Very long in the tooth here. VNQ as well, nice bid here, 3.5%. Again, this is a power bid here. You basically gapped right up to that 100 moving average and pushed higher. I still do not like this though. Don't fall in love with this pattern. We can get over here. Look, that's a pretty good short squeeze there. You do have the weekly inside bar, so it is starting to play out. I wouldn't rule out a little bit more of an up move here, especially if the market gaps up. But this is not an area I would want to be long for 2023. Anyways, XLF pushing higher, so that's also above Monday's pivot. Remember, we do have bank earnings. JP Morgan looks like it wants to get to that 140 level. I told you guys that for quite a while here. It's just underneath that. We have earnings coming up. Goldman having a nice day up just under 2%, back above the 50 moving average. We'll see. Maybe that wants to go test 370. That was your previous breakdown. You got that pivot bar up there. Then, of course, that trend line, that very long-term trend line, going all the way back to 2015. So that could be resistance there at 380 if you were to get up there. I'm not going to pretend to know what happens with earnings. We could overshoot. That's always the case, or that can always be the case. That's why I don't like to predict what's going to happen with earnings, but we are seeing some short covering here. So we'll give banks the benefit of the doubt for now. Broker dealers also up nicely as well. And again, back through that, they got through that pivot there, or that breakdown area. So next pivot is around 480 there for XBD. Anyways, onto crude. So nice pop here for crude, and this actually turned around right around that inventory number data. It had a nice pop in the morning. I'm just going to double check here. Yeah, it had a pop in the morning, then it sold off into the inventory number, and we got a bid after that. This is not a terrible look here, and you are going to, looks like, 77.42. If we can close above that by 5 p.m., that's a failed inside bar on crude. So we would give that much more of an upside bias. And then you could definitely say, right, you could definitely say that there's a case to be made that you can go up here and trigger that inverse. So we'll be keeping that on watch. I'll in fact leave this white line on here. I know I usually erase it, but we'll leave that on there for now because that looks like it could be a failed inside bar on the daily time frame of crude, but we have to see how it plays out and if we get any follow through with that. Anyways, market's about to close here. So in about 10 seconds, XLE, kind of a nothing burger here. XOP, OIH, same thing here. OIH is just holding up really well though, but nothing's really changed as far as my analysis there. Okay, so market's closing at the highs of the day, 395.50. So it looks like we got to gap fill, or excuse me, not gap fill. So it looks like, yeah, we got above this pivot high. So we got above the pivot high from the 15th. That's a pretty good move there for the spiders. But again, you can see not very heavy volume. And I mean, come on, we're you know, you don't have to be a 10-year chart technician to tell you're getting into a very lofty resistance level here. That said, like I said, the internals still look pretty good here for the market, so we'll have to give them the benefit of the doubt for now, and we'll just have to see the market's reaction tomorrow. Anyways, over to Natty. This took a pretty good dump intraday, and I think somebody got capitulated here because look at that 1030 candle there. Big dump into that. I don't know who got taken out, but pretty good volume there. So 6,300 contracts there, pretty good sell-off there, and then a nice recovery. So again, I do like nat gas here. You're into that weekly 200 MA. It is getting tested. It looks like they tried to flush somebody out. Maybe they want to scoop it up cheap. I don't know. But this should be a very good weekly level given how oversold you are. And sometimes, like I said, those weekly levels, they don't play out right away on Monday. Sometimes it takes we might just have a doji candle. We could close with a doji on Friday, and then next week you could get a bid. So there's always that possibility there. But nat gas, interesting price action here, and it did come well off the lows to close green. Dollar index, nothing's changed here. Again, you could be starting to put in an inside bar, so we'll be on watch for that. But this is poised to make new lows, and I still expect this to get to that 102 handle. Gold here, again, same thing. Nothing's changed, up 0.25%. It's hanging in there. It's holding up for now. This should move tomorrow based on what bonds do. If bonds get a bid, this might get another bid here. Maybe it pierces 1900. I definitely can't rule that out, but it's holding up. I just would not be a buyer at these levels. Same thing with silver. Again, it has backed off the highs. It still has an inside bar. We'll see what it does tomorrow. My analysis has not changed on any of these. And then platinum putting in a pretty good tail candle here today. So that may want to come back down and retest 1050. So we'll watch for that here. But yeah, platinum's just been a powerhouse really since late summer. And then copper, powerhouse move here up 2.5%. I told you guys 420. We'll see if it gets there tomorrow. I don't see it getting too much through that right now, but that is a power move there on copper. If this reverses though and closes back below 396, and I'm only saying that because we're having the CPI number tomorrow, and that could really obviously move markets because this is well above 396 at this point. But I've seen copper pump and dump before, so I'm just saying that. But we'll watch to see what it does at 420 tomorrow. Again, the weekly level is still 396 until proven otherwise. Bitcoin here getting a nice bid up 51 basis points, nothing crazy, but a nice float higher. You can see here it's hanging in there. Maybe you can get to that 100 moving average, 18.5, 18.6. Again, that's really all I see for it right now here. This is going lower with everything else. But for right now, we'll just give it the benefit of the doubt as long as the markets hold up. Anyways, let's take a look at the Qs one last time here. So yeah, 277.55. So that's a close above the daily 50 moving average. Yeah, we're getting really close to that 280 handle. I think the Qs are pretty extended here, at least in the short term. And we're getting to an area where I think risk is starting to skew just a little bit to the downside. So just bear that in mind. Anyways, guys, going to wrap it up here. We'll see what the CPI does the CPI number does tomorrow. You guys take care. Come find me at carnivoretrades.com. Talk to you all tomorrow.